Hello traders, this is Blake Morrow. You are listening to the week ahead video for October 31st, 2020. Happy Halloween for all of you that are celebrating the Halloween holiday. It's unfortunate, we're dealing with COVID and this Halloween actually falls on a Saturday, which that doesn't happen once every how many years? And then on top of that, we actually have a full moon tonight. And from what I hear, we don't have a full moon on Halloween till 2039, I think is what it is. That's the next one. Anyway, it's a shame because this could have been the most epic Halloween ever. But that doesn't mean it won't be a great week this next week. We have a huge week coming up. Now, before I get, you know what? I was going to say something before I get into, just telling you guys how you get involved with the ForexAnalytix community. I'm going to tell you right now, this isn't going to be a very, very long week ahead video. There's a reason why. Obviously, we're consolidating ahead of the election. But more importantly, I want you guys to actually focus on coming over to the F.A.C.E webinar Monday and Tuesday, or at least listening to the recordings. So you can register right here for the F.A.C.E webinar. You can see it right there. It's on the webinars page. The second one down, this is the one that's free. It's our daily webinar. So you're going to get my team, myself, you're going to get our opinions about what to look forward to over the next couple of days and following the elections. So that's going to be the best way to get our most up-to-date information if you're not a ForexAnalytix subscriber. If you are a ForexAnalytix subscriber, then you just log into the chat room. So when you try out ForexAnalytix, it's only $1 for 10 days to try it. Okay, it's a perfect time to take advantage of that. Why? Because you could be in the chat room for the next 10 days through this whole election process. That's like the best part about it. So try it out. I mean, even if you decide to just hang on to the light version, so this way you have the mobile app and all the notifications, you still get the premium version, or you get the chat room for the next 10 days. Now, obviously, you can see if you want the premium version, and that's the version where you get the chat room and you get all the advanced analysis types that we offer. So, but you get a lot of great tools. For the price of admission is very inexpensive on a monthly basis for what you get. So make sure you come check us out. And like I said, today is like the perfect day to do it. So this way you can be in our chat rooms. And if you haven't seen what our chat rooms look like, this is basically our chat rooms. And you can just see Friday, it'd go back and back and back. You could just see all the chatting we did and all the, and this is all Friday. I mean, Friday is a slow day and I'm still going, it just goes and goes and goes. But that's where we're at all day long. Okay, enough about that. Let's talk about, all the analysis on here is still being freshened up for the weekend. But I want to talk a little bit about what's upcoming. And I'm not going to take away from the blog because we have a blog that's being published. I spent, with the team, I spent a few days putting it together, especially for those of you that are not in the U.S. So if you're, outside of Europe, or outside of the U.S. in Europe or Asia, or anywhere else actually for that matter, it'll be a pretty simplified way to look at the different outcomes that we're looking at and how the markets might react. Now, just because I feel the market's going to react one way or the other based on, a Trump win or a Biden win, or, the Senate is taken over by, is controlled by Republicans again, or it's controlled by Democrats, that how I feel and the way I expect the market to react doesn't mean it's going to happen that way. It doesn't, obviously. So I am laying out a plan on what I want to do. And like I said, you can get that information in the blog. I'm not going to take away from that because we spent a lot of time on it. which will be out this weekend, and about probably the same time that you get the week ahead video. So I don't want to take away from it, but I do want to point out that I think we're consolidating, and let's think about this like longer term. Let's say stocks do go down post the election for whatever reason. You can say, oh, Trump got elected, so reelected, and China is going to be a big issue in the next couple of years. Stocks go down. Okay, fine. Biden gets elected. Trump's not getting elected, so the market should go down, and the market goes down. Fine. A realistic expectation. The results are contested. Stock market goes down. We're in limbo for a couple of weeks, maybe a couple of days. Stocks go down. Fine. That is realistic. It could happen. What I would be focusing on are levels that you could be buying the S&P on dips, because let's face it, the Fed's actually meeting next week. Did you guys know that? The Fed actually meets on November 5th. Is there a chance that the Fed could react on Thursday of next week? Yeah, but probably won't. But do you think they can act mid-meeting? Absolutely. And do you think they're going to be plowing, more money into the market, especially if equities go down? You bet. Okay. So I would be more focused on where some downside targets are to be a buyer if we do see some sort of aggressive sell-off. Okay. And again, for whatever reason, it doesn't matter. You guys can, you can try to figure it out why it's moving down. But if it does, we are expecting more stimulus, more Fed action, infrastructure spending going into next year for the most part. The amounts and the amounts will probably be dictated by what happens post-election. Okay. Now I'm not going to focus on like I said, the different outcomes. I lay out for you with the rest of the team in the blog. Okay, and we talk about the dollar index, the S&P, and gold, and what might be some potential outcomes there. I do want to show you a couple specific currency pairs. All right, just here really quick, and like I said, this is not going to be a long video. First of all, the euro closed on its lows. Now, I don't know about you, but I think everybody is waiting to buy the euro around 115. Okay, everybody's looking to buy the euro around 115. We did have the ECB meeting this week, and as expected, Christine Lagarde was dovish, and I did expect that. She basically laid the groundwork for action this next meeting, which is fine. The market took her as being extremely dovish, which she was. So we might actually get a push lower, especially if stocks move lower. We should see the dollar strengthen. So I'd be looking towards, and let me grab this fib level because we're past the 78% retracement on a daily chart. You can see that here. Let me throw that into some extensions. The 127% extension of this last move higher comes in at 115.35. And as you can see, this lower trend line here probably will intersect if we end up getting down there. It'll probably intersect with this previous spike high that comes in at 115. So I'm going to just say between 115.35 and 115, that's going to be the area that I'm going to be looking to see if the euro will bounce or not, because if it will, and if it starts to show like some signs of life down there, I might be a buyer. Now, we might not get down there, especially if the market, looks at this election and they say, hey, look, I don't know if Trump's going to win, and we might get some major stimulus going on this next year, and we might have a blue wave. Excuse me. Then if that's the case, I got to start selling dollars. The euro might not hit a new low. We might actually start bouncing soon. You got to keep an eye on the Aussie. We have a big wedge setting up here. Huge. 70 cents. Okay. We have a descending wedge. Excuse me, it's a bearish wedge. The reason why it's bearish is when you have lower highs and consistent lows, that means it tends to break lower than higher. Higher probability of a downside break. If I had to, I always tell our traders, all the time, if I had to throw a number at it, because I'm not a statistician when it comes to charts, I'm not going to sit there and, go through 40 years worth of data and try to figure out which, based on my experience, probably about 60% of the time, 65% of the time we break lower. That means 40 or 35% of the time we break higher. So does that mean that we're for sure going down? No, not at all. And especially if you factor in the idea that stocks may be going higher because we're going to get a lot of stimulus and maybe it is a blue wave that takes on the market and, we get quote unquote risk on. This is a perfect platform to see a rally, especially as inflation, looks to take hold over the course of the next couple months. And let's not ignore the fact that the Aussie is above a pretty key trend line right now. And we probably saw, this could have been a generational low thanks to COVID. I say generational low. We might not see that for the next, 5 or 10 years. The Aussie, as long as it holds above 70, I wouldn't be too terribly bearish at this point. Okay. All right. Like I said, I don't want to take away from the blog, and we do have an election coming up this next week. It is going to be probably. Oh, I just got this statistic from one of the UK betting exchanges. This comes from one of my colleagues in Greenwich. It says the the 2020 U.S. presidential election between President Donald Trump and former Vice President Joe Biden has become the single biggest betting event of all time at the UK-based Betfair exchange. That is pretty daunting, isn't it? That means that you have to be really, really careful for the next couple of weeks probably. All right, we do have some other things that are happening next week. We have non-farm payroll next week, so we have our jobs report on Friday. We have the Bank of England next week. We have the FOMC next week. We have New Zealand employment data. We have the RBA actually Monday night. I forgot to mention that because I was thinking it yesterday and then I just forgot that until just now. We have the RBA Monday night, which could be could move us actually ahead of the presidential election here. So really a huge week going into this next week. So is there a better place to be than in our ForexAnalytix chat room, chatting with myself and the rest of the team and a lot of other traders that have been, frankly, I've been chatting with for over 10 years. Some people are in that chat room from 12 years ago, 15 years ago, and they're still there. So I don't know if there's a better place than to be part of the ForexAnalytix community right now, especially through these tumultuous times. So give it a try. It's only $1. Okay. I'm gonna leave you with this because I think this is very important for this week. Well, it's important all the time. And it is something I mentioned in the blog, but I'm going to say it to you guys now, especially in these times. It is okay to be wrong. We're all wrong as traders. That's part of trading. I don't get every trade right. I'm happy if I get 50% of the trades right. It's more about risk reward, right? But it's okay to be wrong. Just don't stay wrong. It's okay to be wrong. Just don't stay wrong. Because you could get really upside down in this market if things move against you. Okay? And I'm just saying that for your own safety because I do care. All right, guys and gals, my name is Blake Morrow. And if you found this video beneficial to you going in this next week, please give us a thumbs up on the YouTube channel. Subscribe to our YouTube channel, right? And remember, do not forget the last thing, if anything, make sure you come listen to our free webinars every day, because I spend 30 minutes going through all the majors and putting out the key support and resistance levels based on, fib levels, channel support, resistance, trend lines. I find those important levels with you so you have them into the next trading day. So make sure you register. It's free. All right, guys and gals, my name is Blake Morrow. I hope you guys have a wonderful and spooky Halloween. I'll see you on Monday on the F.A.C.E webinar. Thanks, everyone. Bye-bye.